Inflation whack-a-mole, because this is what's going on here. When some prices fall, others rise. While prices for gas, which were the main driver for high inflation in recent months, cooled off further. You guys know why that happened, right? Should probably find a, yeah, the BBC is a good one. You guys trust the BBC? Is that good? So that happened because of this. Like, prices in gas went down because Biden orders unprecedented release of oil reserves. Now, this was like, the reserves were created in the 70s because of the big gas shortage that happened back then. So you do have to consider the fact that we do come back around, and you got to pay the piper on that one, right? That's okay. Health insurance, for example, was up 28% year over year, which is the largest increase ever. Well, you can't get health care in the U.S. anyways unless you're a millionaire, so that's fine. Similarly, groceries were 13% more expensive than a year ago, and rent prices surged 7.2%, the highest in 4 decades. And even though gas prices slightly fell in September, economists expect energy to pick up again in the coming months as the Organization of the Petroleum Exporting Countries announced it would cut production by 2 million barrels a day, which might drive up prices again. It will drive up prices again, plus we won't have any reserves left. The reserve release, in my humble opinion, is just for midterm elections. So, not financial advice, right? But I would expect... well, I mean, what are you going to do? There's nothing you can do about it anyways. Let's be honest. But not financial advice. Gas prices will go up again after midterm elections. And probably exceed where they were at now. Or where they were at previously. Here. Investors should be attentive to continued divergence in direction between headline and core measures as compared to prior periods. Michael Wise, president of Yield Street, said, core categories such as housing costs tend to be stickier in terms of price movements and can give insight into future inflation expectations. Central bankers have raised interest rates 5 times this year so far by 300 basis points or 3 percentage points in an effort to bring inflation down to 2%, but they have a long way to go. In a survey conducted by Bankrate, 43% of economists said they think that inflation hasn't peaked yet and will be more significant over the next 12 to 18 months. According to the minutes from the September meeting of the Rate-Setting Federal Open Market Committee, which were released on Wednesday, central bankers indicated that they expect rates to be high until prices come down sharply. Quote, they had raised their assessment of the path of the federal funds rate that would likely be needed to achieve the committee's goals, according to the document, with inflation showing little signs so far of abating. Bitcoin, which has fallen dramatically this year, could stay under pressure as traders fret over the prospect of further steep interest rate hikes by the Federal Reserve on November 1st to 2nd, when the FOMC meets next. So, what we are seeing, obviously, is inflation, record high inflation, but not according, of course, to the U.S. president. So that's okay. We also have more news. Speaking of, look, energy is energy. Energy is a thing. And energy is what runs the country. It's what runs the world, obviously. Like I've always said, I've brought this up, the success of a society is based on the amount of energy it can utilize and how efficiently it can utilize it, right? And that is, no different when we start talking about state level. Of course, Texas being in a unique position to where it does have its own grid. It is not connected externally to any of the rest of the grid in the United States. It puts it in a very unique position, especially when it comes to Bitcoin mining. And now what we're seeing is kind of a federal probe, let's call it a federal probe, into how Bitcoin mining energy use is in Texas. And it is, As you can tell from the title, I consider this, my bias on this is that I consider this a little bit of bias from their side as well. So you'll see here that U.S. Senator Warren leads congressional group's probe into Bitcoin mining energy use in Texas. 7 Democrats from both the Senate and House are asking Texas grid operator ERCOT how Bitcoin mining is impacting the state. This seems quite innocuous, right? Like it's like they're just asking how it's impacting the state. But what you'll see here is a lot of clever wording, a lot of political shifting, like however you want to say it, they're trying to guide the conversation into this is bad for the grid. When in fact, like if we look at like energy consumption, what happened during the winter storms pre-Bitcoin mining, right? We saw the grid go down, money funding wasn't there to winterize properly, all that sort of stuff. And then we move into post-Bitcoin mining Texas. We have the hottest summer ever and the grid remains stable. That is my anecdotal evidence as being a Texan to basically in response to what's going on here or what these queries are about. But let's get into it. A group of 7 Democratic lawmakers in Washington, D.C., led by Senator Elizabeth Warren of Massachusetts, are looking into the energy usage and carbon emissions of the Bitcoin mining industry in Texas, as well as the impact on the grid and local consumers. In a letter Wednesday addressed to Pablo Vegas, the CEO of Electricity Reliability Council of Texas, ERCOT, the group expressed concerns that Bitcoin mining's enormous demand for energy in Texas is straining the state's grid, adversely impacting consumers and U.S. climate goals. The only one where I might say yes would be the consumers. And I still need to get verification on this. I was actually kind of talking to people about it because I'm curious. Because it doesn't seem to be statewide, right? As far as like power companies are not charging this to every single individual, but there are some additional fees that appear to be putting in that are refunding, of course, the miners for turning off their operations, and that cost in some locations is getting passed on to the consumer. That is a true thing that is happening. And I think that should be looked into because I do not think that is right. It's just, I don't think that it's fair. That being said, does it stabilize the grid? Would you have to pay for that in another state if you were renting or borrowing or paying for buying electricity from another state? Yes, that would get passed down to the consumer. So is it much different than what is already being done? No. Should it be different? Possibly, yes. It should be possibly different. Crypto mining is adding significant demand to an unreliable grid and contributing to the global climate crisis, claim the lawmakers, who further assert miners are benefiting at the expense of consumers from huge ERCOT subsidies in the form of demand response agreements. So-called demand response programs mean that when demand for energy across the grid is high, miners power down their operations in exchange for energy credits that they can use in the future, thus releasing power back to the struggling grid. About 1 gigawatt of mining powered down this summer as heat waves swept across the state. The Democratic lawmakers see things differently. Quote, in simple terms, the Bitcoin miners make money from mining that produces major strains on the electric grid. And during peak demand, when the profitability of continuing to mine decreases, they then collect subsidies in the form of demand response payments when they shut off their mining operations and do nothing. And my friends, that is, oh man. So we had this conversation. I think you want to go check out my video with Vaccaro, Mr. Vaccaro here, talking about this one in particular. There is a huge, basically, here's the way it works, just so you understand. The power that the Bitcoin miners are utilizing that then they provide back to the grid when they shut down would not be there without the Bitcoin miners. Like, the funding would not be there without the Bitcoin miners. It would be like, and in addition to that, if they weren't there, let's say they spun this all up, they helped build the infrastructure, they paid for it, that sort of thing, and then regulation pushes them out and they quit. What happens to all that excess power? It gets wasted, right? So you're either going to have waste or you're going to be able to monetize that and also have a good shut off program that provides power back to the grid. Essentially, what would happen if you guys ever played SimCity, right? You play SimCity, you build the city up too big, then part of the city goes down. What ends up happening, you have less people to work the power plants. The power plant shuts down. And if you have a nuclear energy power plant, well, then the whole city's fucked, right? It's not dissimilar. You can't just, you build out all this infrastructure. You have miners using that infrastructure. That infrastructure basically is providing energy to the miners and to the rest of the consumers. Then you have the Bitcoin mining industry leave abruptly because of regulation or whatever. Then you have basically a whole bunch of excess energy, not as many people to upkeep, of course, this infrastructure that now nobody needs because there's not enough people there to support it, except in very small use case times in like the heat of the summer or the very, very cold of the winter, which is what we're trying to stabilize, right? That's the entire point of it. Then it just goes defunct and all that equipment is wasted, and you just have a dystopia again. It's not dissimilar to like you can see what happens when industry falls apart in places like Detroit, right? And so on. Like this isn't rocket science. You can just go play a game like SimCity and figure it out, right? I don't know. It's ridiculous. Bitcoin miners flocked to Texas following a ban to the industry in China last year, the largest hub for crypto mining in the world, due to its seemingly abundant energy and friendly regulation. There are now about 1.5 gigawatts of crypto mining in Texas, with another 5 gigawatts set to connect to the grid by the end of 2023. According to the local industry association and lobbying group Texas Blockchain Council, I got to meet those guys, which is super cool. ERCOT said that it had 33 gigawatts worth of applications from miners on its desk, but the TBC said that includes some double counting. At any rate, ERCOT has slowed down application approvals as it tries to figure out in detail how miners can be integrated into the grid. Besides Warren, the letter was signed by Senators Sheldon Whitehouse, Democrat out of Rhode Island, Edward Markey, Democrat out of Massachusetts, Al Green, Democrat out of Texas, Katie Porter, Democrat out of California, Jared Huffman, Democrat out of California, and Rashida Tlaib, Democrat out of Michigan. It's but the latest salvo from Warren against Bitcoin and the miners over environmental and other concerns. Last year, she spoke out against Greenbridge Generation, a natural gas-powered Bitcoin miner in New York State, which eventually saw its air permits denied. And yeah, we've talked about that one before. In fact, we talked about that with Mr. Vaccaro. So if you want more information on that, go check that video out. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.